So what's up, bosses? Joe here, budgetboss.ca. It is Friday. It is November the 15th, and I'm going to get into a heated topic, an important topic, especially in my industry. I'm going to talk about term insurance versus permanent insurance. Now, before I get into which one's right for you or which one's better, I'm going to describe what they are. So this is life insurance, and I'm of the belief, the strong belief that everyone needs some form of life insurance. The reason being is because it's the prudent thing to do to make sure that the people left after you aren't left taking care of your final expenses or taking care of your debts or left with any sort of expense based on the fact that you're not there, be it income, mortgage, stuff like that. So you want to make sure that you have life insurance. I'm also of the belief that you shouldn't spend too much on life insurance. Now, it's contrary to a lot of people in the industry because we get paid on how much life insurance you get. So the more expensive your policy is, the more we get paid. So let's jump into which one is right for you. But first, which one is which? Term versus perm. So let's start off with term. Term insurance is pure life insurance. Basically, you die, someone gets money. You pay premiums. As long as you keep paying premiums, you have this form of insurance. Now, basically, every month you're going to have a premium taken out. So let's just say, for instance, you have $500,000 worth of term life insurance. That insurance is going to cost you, say, whatever it may be, $20. It's all dependent on age, sex, and smoking status and health status. So let's say it costs you $20 a month. The term factor of it is how long that price is held for. So for instance, you could have something like 10-year term, 20-year term, 30-year term, or even term to age 65. Now, these products are based on the underwriting done at the time when you get the insurance. So that's why it's important to get it when you're young and healthy, because if you're older and you develop a chronic condition, like I have one, ulcerative colitis, then you may not be able to get the insurance you want, or it may be more expensive. So you have your term insurance and it costs you $25 a month for $500,000 worth of coverage. You have term 10 insurance, so this insurance, the price will last you for 10 years. After the 10 years, the price will go up. So it's incumbent on you to actually go in and see if you're still insurable and rewrite that policy or change your policy so the price is as low as possible for as long as possible. You can lock it in longer, 20 years, 30 years, but then it'll be a little bit more expensive. So you want to check out the prices and see what's going on. And the reason why I like term insurance because it's the most bang for your buck. It's the cheapest insurance you can get for the most amount of coverage. And that's why I think it's a great form of insurance, because you don't want to be insurance poor, spending too much money every month on insurance. Now, I recommend having anywhere from 10 to 12 to 15 times your income in term insurance. You can add to that if you have a mortgage, add that into it. You can add to it if you have any other debts that is jointly shared by you and a spouse, or if you have educational goals for children. That's an important thing too. So getting the most insurance for the cheapest price is my MO. We also have whole life insurance or permanent insurance. Now, this insurance is that, just like the name says, lasts forever. So you pay premium into this insurance and you will get paid out, or your beneficiaries will get paid out when you die, whether that's tomorrow or sometime 80 years from now. Doesn't matter, it will last forever. Now, you got to figure if this insurance is going to get paid out, it's probably more expensive. And permanent insurance typically is more expensive than term insurance. Another reason why permanent insurance is more expensive than term insurance is the fact that most term policies, or a lot of term policies, have what is called cash value. So this cash value builds as you pay your premium. Your premium or your death benefit will start, say, maybe 50,000, 100,000, starts at zero. Over time, as premium, the cash account grows and is invested, and the interest grows and grows and grows. The dividends keep paying into that account, and over time, you will have cash value that you can take out of that policy and use for whatever purpose you want, or it just keeps growing the death benefit, and that will be left to your beneficiaries. Now, the problem is with whole life, and here's where I'll get into which one's my favorite, is the fact that it's very, very expensive for the death benefit. Now, there's times in life where whole life makes a lot of sense. And the reason why I'm not going to poo-poo it completely, because I think that it actually makes sense in certain situations. One situation where I think it makes a lot of sense is if you're getting insurance for a child, it can build cash value that they can use later in life when they are, say, in university, getting married, down payment on a home, stuff like that. So that's where it makes sense. And the good part about it, you can lock in their insurability at a young age. So when they get older, if they do develop a chronic condition like I did at 16, then they have insurance and can get more insurance based on the fact that they did the underwriting when they were a child and probably supremely healthy. Another way it makes sense is if you're getting a very small policy just to cover burial. And I think that's a very prudent thing to do, because if you actually get the small policy to cover burial and you can pay for a limited time, say you pay for 20 years, but the policy will last forever, that policy makes a lot of sense, because if you get that when you're younger, it's cheap. And then later in life, you have this policy, you know, no matter what happens in life, your burial will be covered. It's not going to give you a huge death benefit, but it will cover funeral costs and it will grow over time. And I think that makes a lot of sense. But you want to make sure that you can afford that policy, because it may be, say, $30, $40, $50 a month for a small death benefit. And you want to make sure it's a limited pay option. So you're only paying for, say, 10, 20 years. You don't want to be paying this policy into your 80s, okay? So you want to make sure that that's the case as well. Another time is when it makes sense is if you get a massive whole life policy. And the reason why that makes sense is if you're actually looking to leave money to the next generation, that's one of the best ways to do it. You can take the money that you have, filter it into this life insurance policy. It goes to your beneficiaries tax-free. So if you're putting a lot of money into it, say $10, $20, $30, $40,000 a year, this is money that you're not going to touch. You're leaving strictly to the next generation. And to me, that is one of the best ways to do it. At the same time, though, if one of your goals is to use this money for retirement, do not be spending this money on whole life insurance. You want to make sure that you have your retirement, your nest egg set, and then you can leave extra money to the next generation. So a lot of people aren't in that position. The money that they have set aside for retirement is going to be theirs, and they need to be able to access it. Only use that if you know you're not going to use this money at all. If you have $1 million for your retirement and you have an extra $300,000 that you want to leave to the kids, and you know you're going to leave it to the kids, then you can do that. So that's where it makes sense. Term versus perm, I tend to lead to term. Reason being is because you get the most bang for your buck. You can get the most insurance for the least amount of price, and then invest your money for retirement. The term also locks in your insurability, so later in life you can convert the term policy to a permanent policy and then use it for what I just mentioned, estate planning purposes, to leave money to your children or anyone or a charity or anything tax-free. So you start off with the term. When you've built up wealth, you actually can use that money and put it into a whole life policy that will last forever. Yes, it'll be expensive, but it's your asset that's paying for it, not out of your pocket when you're trying to build wealth early in life. So that's my take on term versus perm. Lean to term. If you're confused about the two, shoot me a DM, because I can explain which one's better for you. Most people, I would lean to the term. Start off with that. You can always change into a whole life policy later in life, and at least you haven't dumped a ton of money into an insurance policy that you may or may not be able to afford. So if it's not in the budget, no matter what type of insurance it is, you got to make sure that you're not over insuring yourself and your insurance poor. And that's a big thing. So thanks for tuning in today. That's my take on term insurance versus perm insurance. I hope it was informative. You can check out step 4, and I'm going to put it in the bio or the link below in Facebook and Instagram. You can check out step 4 of the relevant retirement system. That's where I talk all about insurance, and I talk about term versus perm, good forms of insurance, bad forms of insurance, and the insurance that you need to make sure that you're covered properly so you can get to your retirement relevantly. Have a great Friday, guys. I hope you enjoy yourself. Peace.